What's up everybody, Steve here. I came across an article regarding Better.com. It states employees learned of layoffs when severance checks appeared in payroll app. Now you might be thinking Better.com, I've heard of them recently. Well, back in December, one of the founders, Vishal Garg, he was the one who actually did a Zoom meeting and fired 900 people via a Zoom meeting. And in terms of any kind of empathy or sympathy for any of the employees, there just wasn't any. Now fast forward today, the article goes on to say the mass layoffs at digital mortgage lender Better.com have reportedly started, according to employees and other sources at the company, and affected workers are finding out by seeing a severance check in their Workday account, the company's payroll app. The layoffs were meant to be announced by the company on March 9th, but one employee who wishes to remain anonymous due to fear of repercussions told TechCrunch that they accidentally rolled out the severance payslips too early. Apparently, when the execs realized their mistake, they deleted the checks from some people's Workday accounts. According to the employee, the severance checks arrived without any additional communication from the company. Leadership remained absolutely silent, never acknowledged anything in regards to the layoff. They still haven't. An estimated 3,000 of the company's 8,000 employees in the US and India are being let go. And it's rumored there's more to come. Now, CFO Kevin Ryan wrote the company had to adjust to volatility in the interest rate environment and refinancing market. Now get this. He says the company would not be enforcing existing non-compete provisions, but the non-disclosure provisions will still remain in effect. But for this guy to have the balls and say, we're allowing you to break our non-compete, I mean, you just laid off people, that's their livelihood, and maybe that's the only thing that they know are mortgages, and essentially you're saying, we're gonna allow you to go ahead and work for a competitor. Well, thank you, Better.com. Between you and me, if I worked for this company, I was still employed, I'd probably quit and move on because I just don't think that this company is looking out for their employees in any manner. Look, we knew interest rates were rising and we knew that there would be layoffs because a lot of people are just not refinancing. Now, one last part of this article, and I think that this is relative to our modern day of these companies out here raising money. Goes on to say the company has raised over $900 million since its 2016 inception, $500 million of which came from SoftBank in April 2020 round that valued Better.com at $6 billion. Just before the first round of layoffs were announced, CFO Kevin Ryan said in an internal email that Better.com would have $1 billion on its balance sheet by week's end. Now, I've mentioned this in other videos. I believe that we're going to see a lot more companies, especially companies that are taking on a severe amount of debt, are going to go belly up. They're going to be insolvent because they can't service their debt. Now, lastly, I want to say something, and I don't want to scare anybody who's watching this, but I think that if you guys are working for a company, a big company, and it could even be a small company, I suggest you do some research on that company, figure out their financial position and see how strong they really are, especially with all the turmoil going on these days. If anybody has a lot of debt on their balance sheets, there's a good chance that a lot of companies are going to be insolvent, go upside down, go belly up. As always, I appreciate every subscriber on this channel, and I'll see you guys on the next one. Thanks a lot.